Jenny, thank you so much. Les, good to see you. Frank, thank you. Okay, I can't think of a better way to bring this proceeding across the finish line than with our next guest. He is one of the most provocative and interesting investors in the country. His motto is in investing to make a bold call that nobody else believes in, and that is what he has done time and time again, usually to great effect. Pharma, retail, railroads, diet supplements, restaurants, music, streaming. He shorts. He goes long, way long. He usually does it very successfully. Stocks, bonds, it doesn't matter. He is Bill Ackman. Please welcome Bill Ackman to the stage, and welcome back, Scott Wapner.
Thank you, man.
Thank you.
All right, the closer. It's been a minute since we were up here together. Carl's not going to come out. No hugs. We're good. Okay? I do want to start, though, with news, but I think is news. A reported secret meeting that you had recently, you and a bunch of other people with Zelenskyy of Ukraine. Within the last few weeks, it was said to have happened. What happened in that room?
So I don't know that it was so secret, but basically I think Zelenskyy wanted to meet people from the business community, and there were about 10 of us there. It was organized by J.P. Morgan, and it was, this is a pretty important person. I think when we look back in time in our history, he's played a very important role in the last couple of years, and it was an opportunity to sort of meet him firsthand. And I think his goal here, I think, was to meet people who could be potential investors in the country, people who could bring business to the country, and I think what he really had to say was, don't wait till after the war. You can really help us by bringing business to our country now.
Also looking for people to help rebuild after the war.
Yeah, I think, look, I'm very bullish on Ukraine post-war, right? I think most Americans wouldn't be able to identify Ukraine on the map circa 2 years ago. And today, I think people know, how many people live there. They know a lot about the population. I think they feel a moral obligation to help. And I think there'll be a very powerful big business case for the rebuilding of the country.
Are you going to commit personally that you'll give money towards the rebuild, either through you personally or the foundation?
So I've invested about $24 million in Ukraine philanthropically during the war.
You already have?
Already have. Some of that was a philanthropic investment in a company called Zipline, which is a really interesting startup. It's well beyond a startup. They apparently raised $400 million at a $4 billion valuation recently. But our philanthropic support was to get them to launch in Ukraine. And basically it's a drone company that ships medical supplies, principally in Africa, but they places where there isn't good road infrastructure and you need to get blood from one hospital to another, or medical supplies or things like that. And they launched they're in the process of launching in Ukraine because, of course, the infrastructure of the country is not in a great place, and they have lots of need for blood in the right places, unfortunately.
And that was just the start, it sounds, to more investment from you?
It wasn't really. It was not an investment I was looking for an economic return. It was an investment to. I think it was not in their business plan to launch in Ukraine, and so actually got a call from Mike Moritz of Sequoia saying, look, we're actually looking for philanthropic support to bring Zipline to Ukraine, and I think they are. And actually, I had the opportunity to meet the head of logistics for the war at this meeting with Zelenskyy, and I connected him with the CEO of Zipline because, even in a place like Ukraine, there's a bureaucracy that you need to get through in order to, if you think about launching drones around Ukraine right now, you have to have a lot of confidence that those drones are good drones as opposed to bad ones.
It was a good segue to get to the markets because just within the last week, Jamie Dimon said that geopolitics remain the market's biggest risk. Do you agree?
I think I don't know. Maybe in the very short term that's true. But I think, it's sort of the unknown. It's the ultimate sort of black swan type risk, right? What do you worry about? You worry about nuclear war. You worry about, an obligation to defend Taiwan. You worry about, war between the U.S. and we've gone from a period of, a couple decades of, put aside terrorism, which you can't really put aside, but we really haven't had war between major powers, two countries in Europe in 80 years. And so this is not a bright time in our history. But we had a period of time where I think Berlin Wall came down and we thought about peace.
So it's a different environment to be investing in for a number of reasons, which we'll get to. How would you describe what your positioning is today?
So similar to what it's been historically, is we own actually really 8 amazing companies. I'm sure you know most of them. We have a tiny little investment in Fannie Mae and Freddie Mac, which I think together represent maybe a little over 1% of the portfolio. But the rest of those are really options on a ultimate kind of the government taking them out of conservatorship. The balance of the portfolio, great businesses we think do well in really any economic, political, or macro environment. And then we opportunistically hedge risks. And the 2 risks we've been concerned about really over the last it's a year and a half: energy prices and kind of the longer part of the curve, the Treasury curve becoming rates moving up.
Betting on the long end of the curve, rates continuing to go up. You nailed that, and you've been making that.
Well, nailed it would be, we put this on like 18 months ago. We haven't made, we actually made almost $3 billion on 2-year rates. We've made a relatively modest profit here. So if nailed it, we would have made more. But
are you still?
I sort of was quiet about it for a while, and then sort of made my point a couple months ago, and rates have moved a lot since.
Is it still on, that bet?
It is.
And how long will it be?
Well, until we're right or wrong.
I mean, are you still figuring that rates at the long end, the 30-year, for example, or however on the long end, are still going to go higher?
Yes. Look, I think there's, even in the relative short term, there are a number of reasons why rates can move a lot. Among them, right, we have a government shutdown. We're going into what looks like a highly probable government shutdown. We're going to have a data shutdown, right? All these little government agencies that put out data that the Federal Reserve relies on to decide whether to, adjust interest rates, then they're going to lose access to that data. So we're going to have this sort of like kind of dark period. We have probably the worst technical environment in our lifetimes for supply of bonds versus buyer bonds, right? We have China selling. We have Russia, to the extent they own U.S. securities and more, selling. We have Saudi Arabia selling. And we have an economy that is still strong and inflation, 3.5%, 4%, persistent. But, our view is basically you're not being paid enough to enter into a 30-year contract with the U.S. government at a fixed price. 4.7 or wherever it is now. It doesn't make sense in a world where we think structural inflation is north of 3% for the very long term. We went through this very unusual period with extremely low interest rates, where everything just got cheaper. And since the financial crisis, the effort of the Federal Reserve was to make sure we didn't have deflation. The aspirational goal is to get to 2% inflation, and then the pandemic, and trillions of fiscal stimulus, the psychological stimulus of being free to roam after being locked up, all of these factors coming at once kind of lit inflation, and we still have this massive deficit spending. We still have infrastructure spending. The government's selling literally hundreds of billions of dollars of securities, bills, and at some point they're going to have to sell more and more of the longer instruments. And if you look at the balance sheet of the Federal Reserve, it's an imprudent balance sheet. If you think about the United States, right? If this were like a business, you wouldn't have so much short-term. You wouldn't have a third or more of your debt repricing within the next year. So it's not been managed. I think actually Steve Mnuchin did a good job as Treasury Secretary. The one thing he missed is he should have issued a lot of 30-year, 50-year, 100-year paper at crazy low interest rates, and that's going to be a burden.
Hearing a lot from investors these days. Ken Griffin was on our network within the last week or so. I just had a conversation with Rick Reeder of BlackRock. Those who are talking about the possibility of much higher real rates for much longer than people think, for the very reasons that you're talking about. The issuance is so massive, and where are the buyers going to come from? And the result of that is going to be higher real yields.
I don't know about much higher real rates. I think again, my view is inflation, or kind of the House view is inflation is going to be persistently higher.
Well, you are the House.
I guess I control the door on the way in and out, I guess. But, our view is really that we're in a different world. And, the world sort of changes gradually. And you have a generation of people who are used to rates, 4 sounding like a high interest rate. And it's, on a historical basis, it's an extremely low rate of interest. So I would not be shocked to see 30-year rates well into the, through the 5 barrier. And you could see the 10-year approach 5.
Jamie
and
Dimon.
that can happen in the very short term, like literally weeks. We've
10
seen
year.
a huge move in the last number of weeks. And I think a lot of that is investors kind of rethinking what's interesting about the 30-year Treasury is people reflexively buy it whenever they, because they've made money doing it in advance of a recession. But it's really not an instrument you should use to speculate on the short-term economy. It's a fixed price contract with the U.S. government for 30 years and reflects really structural forces. And I think the structural forces have changed.
You must be negative to the equity market. I mean,
No.
how could you have a positive view of stocks if you think that that's the outcome for bonds, yields?
Because if you own high quality, the key is owning businesses that have pricing power. Businesses that can do well in a world of, and by the way, many businesses can do well in a world of 3% inflation. The key is it's hard to manage a business in a world where inflation is volatile, or inflation is 8%, or the kind of crazy numbers. But many businesses can do very well in a world of 3% inflation. And the kind of companies we own, they're very much like royalties. So we own Universal Music, which is a royalty on listening to music. If there's music playing out there, Universal's getting a fraction of a penny for every song that's being streamed. Google's a royalty, if you will, on people advertising, on the web, right, or on YouTube. Restaurant Brands is a royalty on people eating at Burger King or any of their various concepts. Hilton is I continue, a royalty on people staying in hotels and eating and drinking and going to events. The beauty of these kinds of businesses is, actually inflation is ultimately their friend, right? As long as they can keep their costs, as long as their costs don't inflate as quickly as their revenues. And I think the nature of those, so I feel comfortable owning those kinds of businesses, even if inflation remains high. And also, again, historically, if you think about, what is the value of a business? It's the present value of the cash you can take out of it over its life, discounted back at an appropriate interest rate. We were not discounting businesses back using 2% as an appropriate rate of interest. So we've historically, our discount rate we've used, just rough measure is more like 10%, 9%, numbers which discount the uncertainty inherent of investing in equities.
Alphabet is one of your more recent investments, is that correct?
Yeah, we bought it late last year, early this year.
How much did that have to do with AI?
It had a lot to do with AI because AI was the reason why the stock was cheap, right? ChatGPT was launched, incredible game-changing kind of product, and Google really fumbled their offering. And so people said, oh my God, Google's way behind on AI, and the stock sold off to 15 times earnings for one of the greatest businesses in the world. And we did a fair bit of work, but Google's been almost a decade. They bought DeepMind, huge, spending billions and billions of dollars on AI. It's a company known for hiring great engineers. And you could certainly presume they were at a pretty good place on AI, but they're again very different from a startup. They took a much more cautious launch approach, and then kind of fumbled an early demonstration, made people think they were behind, and Microsoft and ChatGPT would sort of, if you will, OpenAI would eat their lunch, and it led to a very mispriced stock. And then we've bought more in the 120s. It's our second largest investment.
Alphabet.
Yeah.
Some would suggest that, and it was said on this stage earlier today by somebody who sold Alphabet when the ChatGPT and OpenAI thing came out.
So we bought from them, so we should thank them. Yes.
That the ball was fumbled and recovered by the other team who ran for a touchdown and then piled on with other touchdowns. And now Alphabet may not be able to recover the leadership role that it had.
Yeah, I think that's...
DeepMind is a perfect example of Alphabet having this in-house and still fumbling the ball.
I would say they fumbled the PR around the ball, but I think they've subsequently demonstrated publicly that they are integrating AI in all of their various products. Obviously, the most obvious example is search, and they are, I think, their Bard is certainly neck and neck with ChatGPT, and we think they're if you think about the enormous amounts of access to data that they have by virtue of the various everything from search to the various products they offer to their customers, email and otherwise, data and the ability to legally extract and train on data is a really important competitive advantage. They also have designed their own chips, access to the cloud, access to the processing power is critical. So they've got many competitive advantages, and I think it's in some ways in an integrated fashion, it gives them an enormous advantage. They will be a dominant player in AI for the very, very long term, we would expect.
I joked at the outset that we haven't sat together in a while, and we certainly haven't done it here. And one of the last times we did was, Carl comes out, you guys give each other a hug, and it was this big moment. And it's hard to believe for me, and I wonder for you, that it's been 10 years since the Herbalife battle with Carl.
Yeah.
You believe it's been 10 years?
Yes. By the way, had we held our short, we'd be up like 70%. So I'm still psychologically short on that position where we've got a nice profit.
Are you still seeing ghosts at night?
By the way, being psychologically short is a much lower risk way.
Yeah. Are you a changed investor from then? Are you different as an investor than you were 10 years ago? And if so, how?
Of course. I'm a continuous learning machine. And all mistakes are opportunities for learning. And so hopefully, I sort of decided at 50, I was like, okay, I'm not going to make any more mistakes. And I made one. But no, look, we've been very fortunate. We've had the best 5 years in the history of the firm. And we're fortunate in the way that we're structured. I've been a kind of Warren Buffett devotee, unofficial, he's been my unofficial mentor for many years. And if you look at his trajectory, he started out as what today you would call an activist hedge fund manager running a series of private partnerships. Over time, he took control of what he called a crappy textile company, or probably what was best described as a crappy textile company. But the access to the permanency of that capital gave him the ability to take kind of the very long-term view in a world where people in the investment management business generally have to make short-term decisions because their capital, it can leave. We really, 5 years ago, got to that place in terms of the structure of our organization, and allows us to take the kind of very long-term view. And we can buy Google at $94 a share when people are scared about and we can own it. And that, I think, is a very fortunate competitive advantage we have.
Are you a better risk manager today than you were before?
I certainly believe so. Well, I mean, look, short selling was never something we actually liked, like shorting stocks, because the asymmetry is in reverse. We're big believers in understanding asymmetry both in life and in investing is critically important, and short selling is on the inverse side of it. So we did that a couple of times. The first time very profitably, shorting bond insurers and company, Fannie Freddie going into the financial crisis, and then the famous Herbalife. But since then, all we do is we own really, really great businesses. And if you want to be a successful investor over time and you find a handful of great businesses, doing nothing but owning them is an amazing strategy. And it's underappreciated, if you will, as a successful way to make money.
The moment from you that I said to myself, this looks to me like a different Ackman, was Netflix.
Okay.
Was Netflix.
Okay.
You were a huge believer in Netflix. And I remember the day where that earnings report came out, and that stock dropped like a bomb.
Okay.
Right?
Not like a bomb.
It dropped a lot, okay?
In a meaningful way.
Dropped a lot.
For sure. Yes.
Enough that we spoke, because I went on CNBC and reported our conversation, and you said, that's enough. I was wrong about this. And I said, the old Bill Ackman might have said, no, this is just a moment in time, management team's great, company's great, I'm staying with it. The new Bill Ackman was like, no, I'm done. That's it. I'm moving on.
Because so I still think the management team is great. And I've gotten to know Reed Hastings even more since that time. And I think he's a first-class person, and obviously his, Ted and the rest of the team, Spencer, et cetera. I think it's an amazing company. I think what we misunderstood or misappreciated was, once they announced basically a different strategy, it became a much more disparate outcome. We still thought they would be successful. I wrote a little letter to our investors. We said, look, we think Netflix is going to be a great investment over time. But in terms of, do we want it to be one of 8 things we own or one of 10 things we own? No, because it's kind of the range of outcomes as a result of the sort of change in strategy, going to an advertising model, et cetera, and predicting the probability of the success of that was a different kind of hurdle for us to climb. So it's sort of the facts changed in a meaningful way. It became a different kind of investment. I would have been happy to have that as maybe even a 2.5% position, 3% position in the portfolio, but that's not what we do. We don't collect 30 things, we put 3% of our capital. We own we have 22%, 25% of our capital in Universal Music. We have, 16, 17% of our capital in Google. These are businesses we feel very comfortable. We can sleep at night and have a very high confidence level of what they look like over a long period of time. If a business doesn't meet those threshold characteristics, or something about the business changes where we misunderstood the predictability of the business, we're happy to sell and find something else to do. And basically, we took the Netflix losses, but the capital, if you will, and we invested in Google, and it was a good decision. And we were able to make a bigger investment in a company we have more confidence in.
I think part of my point would be, just because you like the management team and you think it's a great company doesn't mean it's a good stock. And you recognized that at a moment where maybe in the past you wouldn't have, because you would have believed in it so much that you wouldn't have sold it when you did. I thought it was a moment. I did.
Okay, I'll take that.
I thought it was risk management like maybe people hadn't seen from you in the past.
Okay.
You don't accept that?
I don't think so. I think it's something we would have done in the past. I think the big difference is, look, we're very happy to buy more of something. Not everything we buy goes straight up, right? In fact, our favorite outcome is obviously the best outcome is we get our entire position purchased and then it goes straight up. That rarely happens. What normally happens is you buy something, you make it a meaningful position, and then something happens that causes the market to either not like the stock or the market itself goes down, and you can buy a lot more of something you know well at an even more attractive price. And we've done that all the time in our history.
You're pretty
Chipotle
active.
being a perfect example. I mean, Chipotle, we bought initially at $400 a share, and then they had a couple more food safety problems, and the stock was $250, right? Which is about the move, almost exactly the move that Netflix made. And then we hired Brian Niccol to be CEO, and we bought more. And one of the best investments we've made.
You don't do many interviews. You sure tweet a lot.
No, I don't. Not much.
You tweet a fair amount. You tweeted.
I do that so that to keep you compete with this format.
Well, you give me good material that I can bring up right now.
Okay, good.
Ackman has his problems with Hindenburg report comes out. You tweet, quote, "There's a karmic quality to it. Over his storied career, Ackman has made many enemies. I don't know if he has any real friends. He could use one here." You also likened it to the Archegos debacle, I think we can call it. A little Schadenfreude?
No.
Why did you tweet that? When I saw it, I was like, oh my God, he's poking the bear.
No, look, Carl was not a friendly counterparty when I dealt with him over the course of my life. I did make peace with the guy. He's a charming person to hang out with and have dinner with. But I did not like the way he managed a couple of situations I had business-wise. And so, for Carl to be the subject of a short attack, I did think there was a circle of life kind of quality to it.
You also tweeted, "Transparency is not the friend of IEP."
Yes.
Did you ever go short?
No.
You never shorted IEP?
Never, no. Wow.
Did you?
Again, we don't short stocks anymore.
This might have been a special situation.
No, you know what? You're right. I was short, psychologically short. That one too. So, by the way, I think we're going to raise a fund of psychological shorts. And you can we'll invite everyone to invest with us.
How do you know when to cover?
How do you know when to cover? When it's asymptotically approaches zero.
You psych out yourself.
Yeah.
So I want to talk politics with you too.
Okay.
Because speaking of Twitter, you become quite passionate about that. In February, you said of Vivek Ramaswamy, quote, "I'm going to make a bold and early call. He will run for president and win." You supporting him now?
I have supported Vivek. I've known him probably 5-6 years. Very talented, very capable, very smart. A little too, maybe more than a little too, to the right for me. I was hoping he would be, as I described, a kind of more center-right candidate. And I think he's got a lot of great ideas, but on some positions, Ukraine and some others, I think I profoundly disagree.
So whereas you said he's young, smart, talented, will attract the center to the right to win, he speaks hard truths, which many believe but fear to say. You no longer believe those things?
I agree with everything that I've said there, except for he was not going to attract the center right. I think the problem is it's hard to win being to the right of President Trump, right? And I think some of his views are to the right of President Trump, and I think I think it's a challenge. I think there are many Republican candidates. I think there are many people that have traditionally voted Republican that would love a centrist, more centered Republican as an alternative, a capable business leader with, I would say, more centrist, more traditional, I would say Reaganite views. And I don't think that candidate has emerged in a way that has created an opportunity to compete with President Trump.
Okay, so it sounds like he's off the check writing list, not getting any more contributions.
We'll see where he goes on his various policies. And I like a number of the candidates. Chris Christie, I've spent some time with recently. I thought he did a great job in the debate. I think he is much more of a, I would say, more traditional Republican candidate. I think he did a great job in New Jersey as governor. He's got a lot of political experience. But, is that someone that the American people will support? I don't know. But I do think we would benefit with a broader array of choices on both sides of the aisle here. Yes.
You tweeted,
which is why I've been supportive of multiple people.
Well, including Robert F. Kennedy Jr.
Yes.
Are you supporting him?
I like that his voice is in the race, for sure. And I'm meeting him for the first time, actually, tomorrow.
Have you given him any money yet?
I've written him a check, yes.
So I think some would look at that and say, how could somebody who was so emotional about COVID, you came on my program, we all remember that, as committed as you were to the vaccine and getting as many people vaccinated as possible, given his stance on vaccines in general, some might wonder how you can be supportive.
So actually, I think Kennedy raises a lot of important questions that need to be asked and answered about vaccines. And that's something that we are doing a deep dive on. Just today, I was on the phone with a scientist, and we want to put together what I think needs to be done is a very detailed deep dive into all of the research on vaccines, on vaccine safety, and then among the things we have not done a lot of work on is the cumulative impact on a child, for example, of when I was a child, I got 3 shots. I have a 4-year-old. The schedule is to get 73 shots. And it may not be the virus, if you will, that it's designed to make you immune to a particular disease, or the dead virus, or the mRNA technology. It may be aluminum or some of the other preservatives are used in vaccines, which create risks and challenges. And by the way, as a parent of a 4-year-old, where the 4-year-old has no ability to consent to your injecting something into them, I feel a moral and other paternal obligation to get to the bottom of this issue. I think I just spoke to a scientist today, top scientist at UCSF, who said to me, Kennedy is right on 75 to 80% of the stuff he says about vaccines. The unfortunate thing is there's a 20 to 25% where unfortunately there's just not enough data for the stuff he says convincingly. So I think it's time for us, this whole vaccine thing became a political issue where, if you got a shot and wore a mask, you were on one party. If you refused to get a shot and didn't wear a mask, you were another political party. It's just not a political issue. And there is real reason. Look, we have a generation of kids who have a lot more asthma, have a lot more eczema, have a lot more autism. And we don't yet understand the reason for that. And is it the adjuvant in the vaccine? Is it something about vaccines? Is it some other toxins in the environment? I think we have an obligation as parents to figure this out before we could keep.
Is that where this newfound curiosity came from you becoming a parent?
No, from actually listening to what Kennedy had to say, as opposed to the biggest, I would say, interesting. I'll give a lot of credit to Elon and Twitter or X, whatever you want to call it. I was talking to, again, a scientist today who's a brilliant, epidemiologist, and among other issues. And he was one of the scientists/doctors that raised questions about our approach to the COVID vaccine. And he was demoted on Twitter, and some of the papers he put up on one of the preprint sites were taken down as misinformation. And and you look at this guy, Jay Bhattacharya at Stanford, his recommendations for how we should have managed COVID turned out to be pretty much spot on accurate. but he was basically just taken off Twitter as misinformation. And now Twitter has become a place where people can express their views. And I'm a huge free speech advocate, and I use Twitter. Look, some of the most profitable investments, one of the most profitable investments I've ever made, I made because of what I learned on Twitter, which was the COVID, the trade we made where we bought CDS. It was clear to me that it was a very high probability event that COVID would be here. We'd have to shut the global economy. And I learned that because I could take a dispassionate view and collect data without it. At least those topics were yet to be screened, if you will. And Elon's basically opened up Twitter now. And the downside to a very open format is there's going to be some hate speech. There's going to be some things that people don't like. The upside is free speech has been a critical sort of tenet of our country's principles and helps preserve the democracy. So I find that to be a really important vehicle. And on Kennedy, I read the headlines and always had a perception he was a total wacko. And then I spent some time spending several hours listening to him in a podcast, doing some more work on him as a person. I said, he's raising some really important points on vaccines I hadn't thought about. And so I would say, a year ago, I would have automatically taken a booster. Now I'm going to think about risk and reward, and I don't think it makes sense for me. It may make sense for someone who has health issues, who's older. But vaccines have risk and reward, and you have to do the calculus as to whether the risk justifies the reward. And I really hadn't spent a lot of time thinking about it prior to Kennedy. I give him a lot of credit for that.
January 20th, 25. Who's taking the oath?
I don't know.
Yeah.
I don't know. But I think the logical, it's going to be Trump or Biden, absent someone else credible running for office. And I've done my best to try to convince others to run. I was big advocate for Mr. Diamond, who unfortunately decided not to.
Are you thinking about today what the market impacts are going to be if one of those two win?
No. I think about the global impact. I think our country deserves a great leader that the entire country can get behind. And imagine what America would be like if you woke up in the morning and the entire country was excited about who was leading the country, right? And therefore we're working together as a country to solve problems, to grow the economy, to protect the world. That's a world we've had in our history. We have not had it recently. And I'd love to see that world come back.
Well, you're a very sought-after speaker because you're not afraid to take on the tough topics, and I appreciate you being here. I know we all do as well. Welcome back to Delivering Alpha. We'll see you hopefully next year.
Thanks so much.
Bill Ackman.
Thank you very much, Bill. That's fascinating. Really good. All right. Cue the bottles. I want to do a deep dive on being psychologically short. That's all I want to say. I think that I could spend a lot of money on therapy if I did that. I think Bill Ackman hit on some very interesting things. I expected nothing less. Again, as always, fascinating, provocative. A little bit more Buffett in him today, I think, than maybe he would dispute this, than there was 15, 20 years ago. Own great businesses, sit back and watch them grow. Anyhow, we have come to the end. I am so glad you all came. If you want to watch any of this again, you will be able to. It will be up and posted in a day or two for on-demand viewing. You'll get if you were a ticket buyer, you will get an email that will enable you to click in and go through and watch whatever